truth is 90% of traders have absolutely no idea what phase price is in. Are we accumulating? Is price manipulating? Is it distributing towards a target? Institutions move markets in this way because they want to fill large orders, manipulate liquidity into the market, and then sell or buy into it to distribute their original positions. So I want to show you exactly how to know what phase of the market we are in so that you can trade at the right times in line with high probability conditions. So let's get started with this 3.76 hour trade that played out perfectly on GBP CAD. We'll then look at a bit of theory around how to spot accumulation, manipulation, and distribution, and then look at another example on USD CHF. So let's get into it. So I'm just going to take this away and show you a bear price chart. So we're swing trading. This is 12-hour price action. So the first thing you want to do is combine timeframes. You need to know if you're executing on time frame X, you are trading higher time frame candles on Y. So in my case, I'm executing on the 12-hour time frame, and I'm executing on weekly, 2-weekly, and monthly swing positions. So that is where I'm going to get my context for AMD. So the first thing I'm going to do is overlay 2-week time frame right here onto GBP CAD. And we just see something quite fascinating. It's very clear patterns in the market. And let me show you exactly what I mean. So if we start right here, we see that price, we had this inside bar. So this is a 2-week candle range right here. So this is an accumulation candle. And let me show you why. Because what happens next is price manipulates its high. So what we're doing is raiding the external range liquidity at this candle's high. So price is faking new traders into thinking we're breaking out, setting as many traders into positions at this level as possible, and then dumping against them. And where does it dump to? It dumps exactly to the low of the manipulated candle. So this is the three phases of price. You have accumulation, manipulation, and then fast distribution to the opposing external range liquidity. And then look exactly what happens. So new orders have been accumulated, price then manipulates below this external range liquidity, fakes to go lower, shifts structure, and then where does it target? It targets the liquidity at the opposing end of this candle range. So we are moving from external range liquidity in this area to the highs. So you get AMD, accumulation, manipulation, distribution, accumulation, manipulation, distribution. And then, like clockwork, what happens next? We then raid the liquidity at the new accumulation candle, close inside this candle's range, and then very quickly price fakes higher and dumps to the low of the candle that got manipulated. So we had a blind price chart. Now we have very clear structure in the market that we can use to trade. Now let me show you exactly how the trade that I placed, or that I showed at the start of this video, played out. So we have the manipulation. We have a raid of the external range liquidity below this accumulation candle. This becomes a manipulation candle when we close inside of the accumulation candle's range. We can then mark 12-hour price action. So we have essentially bullish price action. We are respecting lows, breaking through highs. We then get another continuation and the close of this candle. Price then breaks lower because it's trying to entice more liquidity, more shorts into the market that can be distributed into. But that's not what's going on. Here is the order block, the last sell before the buy. We cover the low and we just target the range high of the candle that has been manipulated. It's as simple as that. This is a distribution phase. This is fast price action where anyone that's looking to get short here gets trapped in their position and gets rode all the way up to this range high. And that is accumulation, manipulation, and distribution in action. So let's just touch on some theory. Accumulation, manipulation, and distribution are the three phases of smart money that smart money uses to enter positions, trap retail traders so they're breaking out above highs at this candle range, enticing as much liquidity into the market, breakout traders, stops going here, and then they move price aggressively in the opposing direction towards the external range liquidity at the low of the candle that has accumulated these positions. Most traders react to price movements without understanding which phase is playing out. So they're buying here at manipulation, anticipating breakouts, or they're looking to go short in the accumulation candle, or they're actually exiting here way too prematurely. So they don't realize that there's a very high probability target in play. It matters because this tells us what phase price is in. Are we accumulating, manipulating, or distributing? And ideally, we want to get in to fast moving price action. So it's great to trade these distribution candles because highs and lows are going to be respected and we have clear targets in the market. So let's look at another example on USD CHF. So let's pick up price action right here. And we see we have a liquidation of a previous 2-week candle's high. So price has broken above, shifted structure. We have a true market structure shift. And then what price does is it closes right here inside this candle's range. We then get fake moves higher. So again, manipulating new longs into the market to probably target this high. But what happens is it just sells off extremely aggressively. We see a retracement. This candle then closes below this candle's low. So we're still anticipating lower prices. And then we dump to the target. And this is another important thing to say is that AMD does not always play out in 3 candles. Accumulation, manipulation, and then it's a 2-candle distribution pattern. But you still see price action is extremely fast. And you can basically trade this. So this is more tricky because it's harder to get involved when price is moving so aggressively. But what you see is eventually we get order blocks coming into the market. So we have our higher time frame bias at this candle's low. So as soon as you get an opportunity, in this case an order block, there's a 2-hour trade that plays out perfectly. And that is how to trade AMD. So you wait for accumulation to occur, wait for manipulation, and then let price action show its hand, and then trade towards the higher time frame target that sits at the low of the candle that has been manipulated. That is AMD. So how to apply this? Let's just do a whistle stop tour. Identify potential A candles, accumulation candles. The key to seeing an accumulation candle is that it's clearly not a manipulation candle. It's closing above or below the range of its previous candle. So the next intention of the candle is unclear. Price is probably going to trade in the same direction, but at that point, the next candle can become the manipulation candle. So just wait for that candle to sweep, close above or inside the candle's range of the A candle, and then confirm distribution through price action towards the opposing end of that candle's range. And then it's just a case of using all of the tricks that we know. Enter from IRL within supporting price legs in the direction of your trade. That's how to trade AMD. I'm going to do a lot of content on this and we're going to go super deep. So my model is that I track and analyze 32 Forex pairs, including gold, silver, Bitcoin, and I'm tracking 12-hour price action in conjunction with monthly, 2-weekly, and weekly closes. And we can see AMD playing out on every single price range, whether it's weekly, 2-weekly, or monthly, and we can combine how candles are closing on those 3 time frames to get into high probability trades. Once you get good at this, you can do it in 10 to 15 minutes a day. So please subscribe, follow along, and I'll see you on the next one.